Okay, hello everybody, it's now lunch. So we'll get together again at 1 o'clock, if that's okay with you all. You all there still?
Yeah, thank you. We'll see you at
Okay, let's know we get together at 1 o'clock.
Okay.
Thank you. Bye.
Thank you.
Carry on. Hello,
Hi.
everybody back?
Hello.
Hello, hello, hello,
Yes.
hello. And a nice lunch. Yeah,
Nice lunch. Thank you. And
a very
yourself?
quick lunch. Okay, look, I think, I don't know if you had enough. I don't think, how far are you with A3? Do you need a little bit more time?
I'm just starting with the trial balance. Almost
Okay,
finished.
now look,
So we have just a few more minutes.
yeah, I think so. Look, it's 1:02. We'll get going on at about 10 past, quarter past.
Okay.
Okay, I'll give you another say
Thank you.
10 minutes. Another 10 minutes. Good. Okay.
Thank you.
Okay. All there? Can we start to do this question?
Yes, please.
Yes.
Okay.
Yes, we can.
Is it on the screen there? Question A3?
Yes.
Okay.
Yes.
All right, let's go. John Peters, an attorney, opens his practice and enters into the following transactions. Again, I want you to think that you are John Peters. Record the above in the books of prime entry, post to the ledger, and extract a trial balance. Okay. On the 1st of March. Now, when they give you dates in a question, you have to put dates in the answer. If they give you dates, you don't have to make up dates. On March the 1st, 2002, John Peters obtains a loan to finance his practice of 15,000 from Investec. How does he practically do this? He goes down to Investec and he says, listen, I want to start a practice. Will you give me a loan? They ask him for his balance sheet and etc. And then they it goes to their committee, and their committee side, okay, he's credit worthy, and they give him. How do they now give the money? They give the money to John Peters. When he opens his practice, he obviously opens a bank account. So Investec will put that 15,000 into his bank account. So that is, we know now that is what's happened. Now, if we go through, is there a transaction? Yes. Business? Yes. Money through the bank? Yes. Select the business cash book. Did it go in? So we debit the business cash book. So we debit the business cash book because this is the bank account. And we open an account for the loan Investec, and we credit the loan of Investec with the 15,000. On the 2nd of March, he pays his first month's rent, 3,500, and a deposit in terms of the lease for 2,500. Again, back down again here, transaction, yes. Business, money through the bank, yes. Select the business, money in or out, it's out. So we credit the business cash book. So we credit the business cash book, we paid the rent, 3,500. I open an account for rent, and I debit the 3,500 there. All okay? Then he also pays a deposit in terms of the lease. So we pay a deposit in terms of the lease for 2,500. Money is going out of the cash book. Now, where do I post this to? Where do I post this to, Kathleen? Where did you post it to? Kathleen there? Anna? Liam? Anybody? Tana, yeah, carry on.
I posted it to a whole separate account in the ledger, but I'm starting to think that maybe you just posted under rental. I don't know.
Okay, you posted to a separate account under, what did you call that account?
Just rental deposit.
And what made you do that?
Because they are separate, because then you don't get, I don't know, in my mind, I would get confused if I had rent all in the same thing, and then I don't know, actually. Yeah,
well, that's good. Your thinking is good. What we now think of the legalities of it, and think if it was you, when you leave the premises, what do you do with that deposit?
Oh, you get it back.
Exactly. That is why it's not rent. It's not an expense. It's an asset,
Okay.
isn't it?
Okay, I see.
That is why we have to put it. We can't put it with rent. Rent is an expense. This is just after the month that money is gone. But a rent deposit at the end of the lease, I'm going to go to the landlord and say, listen, you owe me the 2,500, and presumably I would have also demanded that he gives me interest on it for the period that he holds it. Of course, the landlord will then have a look at the premises to see that you didn't wreck them. And if you didn't wreck them, he would give you back the full deposit. So therefore, in your books, it will be an asset. So we need to open exactly what you did. Open an account called rent deposit, and we post it there. In other words, we can see it's the distinction we got to make in our books between expenses and assets. And this is an asset. Okay. If we put it through rent, we'd be understating our profits and understating our assets, because we would be increasing our expenses too much. On the 4th, buys furniture to the value of 10,000 rands and pays by EFT. Transaction, yes. Business, yes. Money through the bank, yes. Money in or out, going out, so credit the business cash book. So we credit the business cash book with 10,000 rands and we open an account for the furniture and we debit the furniture with the 10,000 rand. All okay? On the 6th, issues an invoice to Mr. Sam for 5,000 rands for fees rendered, services rendered. How do we do that? How did John Peters do that? He actually makes out an invoice to Mr. Sam. When he makes out that invoice to Mr. Sam, services rendered, whatever he did, and he gives it to him, number 1, going back to the flow chart, have we got a transaction? Yes, because once he issues him with that invoice, Sam owes him. He's got a legal right to claim that money back from Sam. And what are our books reflecting? All the legal transactions that we've entered into. That is why you as attorneys, knowing the legalities behind these transactions, can understand if there is a transaction or if there is not a transaction. So business, did money go through the bank account? No, nothing's gone through the bank account. So therefore, we've got to select the business journal. And in the business journal, we're going to debit. Who owes us the money? Sam owes us the 5,000. So Sam becomes our debtor, and the debtor must always be debited. After all, he's received the value of the work that we did for him. So we are going to debit Sam. And what is it that we credit? What did we give to him? We gave to him our legal skill. And the financial value of that legal skill is a thing that we call a fee. Fees charged, see invoice 12. We've posted it we've recorded it in the journal. We now need to post it to the ledger. In the ledger, I open an account for debtor Sam, and I debit the debtor Sam with 5,000. And I open an account for fees, and I credit the fees account with 5,000 rand. Okay, any questions? Nothing yet? On the 8th, some of the furniture that you received, that you bought on the 2nd of March or on the 4th of March, is damaged. And you decide to return it. Obviously, the supplier says, look, I'll fix it or I'll replace it with other furniture. You say, no, look, I don't like the quality of it. Please take it back and refund me. So they take away the furniture and they give you 1,500 rand. When they give you 1,500 rand, is there a transaction? Yes. Just or business? Business. Does money go through the business bank account? Yes, because when you receive the money, what must you do with it? You've got to bank it. So therefore, we've got to select the business cash book. Did money go in or out the bank? It went in the bank. So therefore, we debit the business cash book because it interests the bank received. So we have to debit with 1,500 rand. Now tell me, where do we post that to? Sale of furniture? No. Have we still got furniture, 10,000 rands worth of furniture in our offices? No, we don't have 10,000. So therefore, that 1,500 must be credited here. Now what we've got left is 8,500 in furniture. If I walked into John Peters' offices, I would say, listen, I see that you recently bought new furniture. Where is this furniture? And he'd have to say, there it is. And he'd show me where the furniture is. Because what are the books reflecting? The books are reflecting the real issues that he has got. The books say he's got 8,500. So therefore, in his offices, there should be. I must have a look and say, but this is old furniture. I thought you bought new furniture. No, there it is. Oh, it's new. Okay, it is new. You follow? The books are telling you what is in life. Now on the 10th, Sam queries his invoice and John Peters gives him a reduction of 500 rand. Sam is an old client. You sent him this bill of 5,000. He looks at it and he says, hang on a second, this John Peters is getting very expensive, which we all hear every day when we're in practice, that we're getting too expensive. So he says, no, I'm not happy with this. So he picks up the phone and he phones John Peters. Listen, John, You want me to remain as a client, and I like your service, but I think you're charging me too much. You don't want to lose him as a client. He's a good client. He pays well. Okay, Sam, I tell you what I'll do is I will reduce your fee by 500. Obviously, Sam says, okay, you're going to reduce the fee. What are you going to send me? Well, what do you think Peters is going to send Sam? If you go and buy clothes at Foschini, you buy 4 pairs of jeans, and the one pair of jeans has got a tear in it. When you bought the 4 pairs of jeans, they gave you an invoice. But you take the one back because it's got a tear in it. And when you give it back to them, do you walk out there with no document in your hand if you've got an account with them? You're going to say, wait a minute, you must give me proof that I returned this account, this one pair of torn jeans to you. Give me a credit note. So you, John Peters, would have had to pass a credit note for Sam and sent it to him. When he passes that credit note or makes out that credit note, let's go back to the flow chart. Have we got a transaction? Yes, we have got a transaction. Trust or business? It is business. Has money gone through the bank account? No. So we're going to go to the business journal. Now we've got to debit and credit the relevant ledger accounts. Now, isn't a credit note exactly the opposite of an invoice? Yes, it's exactly the opposite. In other words, did we actually earn 5,000 rands of fees from Sam? No, because we agreed to reduce the 5 by 500 down to 4.5. So we've got to pass a credit. So we're going to debit fees 500 and credit Sam with 500. And then we put in here credit note number 15. So now we're going to debit fees. So we go to the fees account and we debit that with the 500 and we credit Sam with the 500. Does that make sense to everybody? Are you all still there? Hello?
Yeah, we're here.
Yes.
Are you there?
Yes,
Ah, good. I'm getting lonely. I don't hear any voices. Now, on the 13th, Sam pays his account. What does Sam owe us? 5,000 less 500. He owes us 4,500 rands. Now he pays us. When he pays us, what do I have to do? He does an EFT into a bank account. So that's the payment. So have we got a transaction? Yes. Business, yes. Money to the bank, yes. Select the business cash book, money in. So we are going to debit the business cash book with the 4.5, and we credit Mr. Sam with the 4.5. And does he have any balance? Does he owe us anything anymore? No, he doesn't, because there's the 5 and there's the 5. Okay. We buy stationery on the 14th for 1,200 rand and we pay by EFT. Again, is there a transaction? Yes, there is a transaction. Trust or business, money through the bank. Yes, select the business cash book, in or out, it's going out. So we credit the business cash book, which is the bank account effectively, with 1,200. And what is it that we bought? Stationery. So I open an account for printing and stationery, or stationery, and I debit that with the 1,200. Then we issue an invoice to Mr. Jack for 6,000 again. I make out an invoice and I make it out to Mr. Jack, services rendered, your divorce, or whatever it was, 6,000 rands, and I email it to him, or I send it to him, I post it to him, whatever. When I do that, have I got a transaction? Yes. We back to the flow chart. Trust or business? Business. Does money go through the bank account? Nothing's gone through the bank account. I would default to the journal. Debit and credit the various ledger accounts. So Jack is my debtor, and what do? We always debit the debtor. So I debit the debtor, Mr. Jack, with 6,000. And what is it that I did? I gave him my skill, and that is called fees. The fees is giving, and Jack has received. I open an account for Jack, and I debit him with the 6,000. And then I credit the fees account. I don't open another fees account. All my fees are accumulated under this one account. And here I accumulate the 6,000 for Jack. Jack now pays 4.5 off his account. He pays me What do I do with the money when he pays me? I put it into the bank account. So transaction, bank, money through the bank, yes, yes, and yes. Money in. So now I debit the business bank account with the 4.5 that Jack has paid me. Does he still owe me 6,000? No, because he's paid me the 4.5. So I credit him with 4.5. If I go have a look at Jack's account now, what does he actually owe me? 6 less 4.5. He still owes me 1.5, correct? So I write it down over here, and then I go and slot it in on this side because I want to check my arithmetic again. 6 plus nothing gives me 6. 4.5 plus 1,500 gives me 6. So it balances out. So he still owes me 1,500. On the 31st, I pay salaries of 3,000 and a telephone of 700. Transactions, yes. Business, yes. Money through the bank, yes. Select the business cash book. Money going out, so credit the business cash book. So I credit the business cash book with salaries and the telephone, 3,000 and 700. I open an account for salaries, and I will debit that with the 3,000 because the relevant credit is in the cash book. And I open an account for telephone, and I debit the telephone also with the 700. Investec charge interest on the loan of 150. Now, if I get a loan from somebody, I sign a loan agreement, correct? Again, this is why I'm trying to say, please put yourself in the shoes of John Peters and think as if you were John Peters. Remember, he went to Investec and he asked them for a loan of 15,000. What do you think they would have discussed? Investec, what rate of interest are you going to charge me? When are you going to charge me? Monthly? Okay, so every month you're going to charge me interest. How much must I pay you? Investec will say, over what period do you want to repay this loan? Say 24 months, okay? 24 months at this rate of interest, this is the monthly installment that you must make to get this account down to nil within the period of 24 months. And that's done, they do those calculations. So the agreement between John Peters and Investec is a loan of 15, there will be interest at a specific interest rate, and the payments will be so many payments, 24 payments, equal payments, and it'll come to nil at the end. So every month, Investec is going to charge me interest. That interest, as I reduce the capital that I owe them, that interest figure will come down every month, isn't it? Because interest is calculated on the outstanding capital. So every month, that will reduce a little bit. Now, in the first month, they charge me 150. When they charge me the 150, have I got a transaction? Of course. Is it trust or business? It is business, got nothing to do with trust. Did the 150 go through the bank account? No, no 150 went through the bank account because we arranged that there would be a fixed monthly payment, which consisted of interest and capital to reduce that loan to nil. But when they charge me the 150, no money is going through the bank account, so therefore I've got to go to the business journal. Now, in the business journal, what am I going to debit and what do I credit? Well, what I do know is that if Investec charge me interest, I'm going to owe them more than the 15,000 because they're adding on to that, isn't it? So simply put, when I do my journal, what I do know is I've got to credit the loan of Investec with 150. What do I debit? Why are they becoming my creditor? What did they give me? Well, it's interest. That's the expense, isn't it? It's the cost of the financing, 150. So I have to open an expense account called interest on loan, 150, and then my narration would be interest charge on the loan. Now I post that interest on loan debit. So I open an account for interest on loan, and I debit that with the 150. And then I go, whoops, I debit it with the 150. And then I go to Investec, and I must credit Investec with 150 because I owe them that much more because they've added interest onto my account. And now on the 31st, John Peters makes the first payment on the Investec account. What does he do? Goes to his computer, pulls up his business bank account, and he opens a beneficiary, which is Investec. He slots in the details, the payment amount is 650, puts in his PIN number, and he activates it, and 650 goes out of his bank account and into Investec's bank account. So therefore, in his books, have we got a transaction? Yep. Trust or business? It is business. Money through the bank account? Yes. Select the business cash book. Did it go in or out? It went out. So credit the business cash book. So we are going to now credit the business cash book, Investec, and where do we debit it to? Do I still owe them 15,150? No, I don't. So that 650 must go off against the loan of Investec. Now we worked out over here 15,150 plus 150 less 650 is 14.5. So there still is 14.5 owed to them. To check my arithmetic again, I slot that 14.5 on this side. I add up the debits and I see, it adds up to 15,150. It's quite correct. Then, are there any further transactions? Nothing further. I've got to do the trial balance, but to do the trial balance, I must first calculate all the various balances. If I add up this lot here, I get a total of 25.5, and on this side, 21,550. So therefore, the total of this, the 25.5 less the 21, that means I've still got money in the bank. The debits exceeded the credits by 3,950. Again, to check my arithmetic, in the 3,950 on this side. Now I add all of these, and what do I get? 25.5, 25.5, perfect. It is, my arithmetic again is correct. Now let's go do the trial balance. What's the first account in our ledger? The loan of Investec, which reflects a credit balance of 14.5. So I slot that in, 14.5. The next one is the rent, and then the rent deposit. I slot in those two. The rent was a debit of 3.5, and the rent deposit 2.5. Oops. Furniture, 10 less 1.5. That means I've got furniture of 8,500. Sam, no balance. The fees account has got a balance of 10,500, correct? 11 less the 500 is 10.5, which I've reflected. So I reflected my fees here of 10,500. Then I've got stationery, 1,200. I've got Jack, who still owes me 1,500. I've got salaries and telephone of 3,000 and 700. And I've got interest on the loan account of 150. And then I also have got to bring in the balance per the cash book, which is that 3,950. So I slot that in. And now I go and add these up, and I add that column up. And what do I get? 25,000. I add that column up, and what do I get? 25,000. So I have balanced. Okay. How did you all go? Hello? Anybody there?
Improvement.
How did you go?
I say I could have used some improvement on my side.
Did you make one or two errors?
Yes, but it's basically just the columns switched, so it's not major.
Okay, but can you see what errors you made and you're understanding your errors?
I do, yes, thank you very much.
Okay. Who else? Who else made any errors?
I made an error.
And what were they? What were they? Is it Nomchebo?
Yes, I made an error. I put the investment, the loan in the business journal instead of in the cash book.
Okay, but now you see what I'm saying when I try to explain, and I try to say, put yourself in John Roberts and think, how does it work? How do you get a loan? You know what I mean? To get a loan, you've got to be given the money, isn't it?
Yes.
Yeah, so that's why. And if they give you the money, what do you got to do? You got to put it in the bank account.
Yes, you do.
Okay.
Yes, it makes sense.
Yeah, you see why I'm saying that you've got to try and think of this thing practically, because look, if you're in practice, it's very simple. because they give you the money and they put it in your bank account. Now it's easy to come and record it because you go look on your bank statement and you say, oh, here's a transaction, and you put it in. So it's far
Yes.
easier in practice than reading it like this. That's why I say when you do these, always put yourself in and say, think that you are actually doing it and think, how do you do it? I know it sounds almost like daft, but you go down to the bank and the bank gives you the money, or they EFT it into your bank account, because otherwise, if they don't EFT, how can you use it to pay your rent and your rent deposit? Otherwise, you would have gone into overdraft when you paid your rent and your rent deposit and you paid the furniture. Okay.
Yes.
All right. Let me see. Olivia, you're saying, Carl, you went pretty well, you said. Olivia, can you please send this so we can revise and double check? Yeah, okay. Apparently, Prudence will send it. Prudence, are you there? I don't know. I will send her in when we do the next one. I will send her an email and ask her please to send it again. Looking at these numbers, just to explain these numbers again. You remember the 7 year, and that 7 there. You don't have to do this in the exam. Eh? You don't have to put these numbers here, because that 7 there relates to this 7 year, which is the fees, and that 7 there. Just to show you when you revising, know the link to see where the debit and the credit is. Okay, so you don't have to worry about that. But I'll send it. Okay, right. Look, so far we have been dealing with business. Now, as legal practitioners, you are also going to have trust money. What is trust money? Rosalie, is Rosalie there? Rosalie?
Yes, sir, I'm here.
Okay. Rosalie, tell me, what to you is trust money?
Trust money is money that your clients pay in anticipation that you are going to provide them with your services, your legal services.
Okay. So that's money. Now, where do we put that money?
In your trust account.
So when you start your practice, what bank accounts are you going to have to open at the bank?
The trust account and then the business account.
Okay. So you are actually opening up 2 bank accounts when you go to the bank.
Yes.
Now, the trust bank account, how can you use that?
So, so when you've rendered the service, obviously they pay the money. Your client pays the money in anticipation of you rendering a service. And after you've rendered the service, that I think you can put the money that you've received that's lying on trust. You can pay over to your business account after you've rendered that service.
Okay. So in other words, what you're telling me now is that when you open the bank, when you start your practice, you're going to open a bank account for your business and a separate bank account for your trust.
Yes.
And if somebody comes to you and wants you to do work for them, and they give you an advance payment, you're going to put that money into the trust bank account.
Yes.
And then when you have actually done the work, you can take that money out of trust and put it into business.
Yes.
Okay. Okay. Charlene, do you agree with that? Charlene?
Which one? There are 2.
Okay. Cruiser?
Yeah, that's me. That sounds right, I guess. I don't know whether they're 2 separate bank accounts or whether it's just 2 separate books that you account for. Because
it's actually 2 completely separate bank accounts.
Okay.
You know, I think you've also got, I've also given you the legal practices. That's also one of your handouts there. Have you all got it with you?
Yes.
It's called, right at the top, it says, I gave you 4 pieces of paper. I think it was 4 pieces. Yeah, there was that introduction, all the questions, that flow chart, and then the thing that says the Legal Practices Act number 28 of 2014 on the top of the page. You all got that?
Yes.
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 Okay. Everybody got it?
Yes.
Excellent. Let's just have a look at chapter 6. These are just extracts from it, eh? And it says Legal Practitioners Fidelity Fund, powers and functions of the board. Paragraph 63(1). In addition to the powers conferred upon the fund in this act, and in the furtherance of the purpose of the fund, the board may. So this is the board of the Fidelity Fund. What may they do? Make an arrangement with any bank for the keeping of trust accounts opened in terms of section 86(2), and for the investment of money in separate trust savings and other interest bearing. Okay, we'll go into more detail with that when we get to do section 86(2). But I want you to go down lower now. We've got chapter 7 in the middle of the page, handling of trust money, obligations of a legal practitioner relating to the handling of trust monies. 86(1). Every legal practitioner referred to in section 84(1) must operate a trust account. Now, what they're talking when they say a trust account, that means a trust bank account. And every trust account practice must keep a trust account at a bank with which the fund has made an arrangement as provided for in section 63(1)(g), which is what we just read at the top there, and must deposit therein as soon as possible after receipt thereof money held by such practice on behalf of any person. So in other words, what is this telling you? Remember, I did say to you, we are doing this whole course so that you can comply with the act. Here is the act. This is what you've got to comply with. And here it's telling you, if you're running a practice, a trust account practice, you have to have a trust account with a bank. Now, can you open it with any bank? No, you are limited. It has to be a bank with which the board of the Fidelity Fund has made an arrangement. The board of the Fidelity Fund makes these arrangements. Why do they do that? Because they negotiate better rates of interest on those trust monies. They negotiate better bank charges for you. And also they've got arrangements with those banks as regards to the interest that is received on these and how those interest gets paid over to the Fidelity Fund. But that we will go to in detail when we get to section 86. But for the purposes of where we are now, all it's telling you here, and we can read that very clearly, that every trust account practice must open a trust account with a bank, which is part of the arrangement made with it by the Fidelity Fund, the board of the Fidelity Fund. So therefore, okay, we can leave that. We can leave the Legal Practices Act again. We go back to the questions now. It means that you have to open 2 bank accounts. It's not like just 2 separate books, 2 completely separate bank accounts. The trust banking account and the business banking account. Now tell me, all of you have got bank accounts. Is Charlene Theron there now? Charlene Theron, are you there? Or
Yes.
Carl Loubser, are you there? Carl?
Yeah.
Charlene, you there?
Yes.
Good. Tell me, Charlene, you got a bank account?
Yes.
Okay. Can you speak up a little bit louder so we can all hear you? I know that I'm half deaf, but so I need a little bit of volume. But tell me, what do you want from your bank?
The best service possible at the lowest costs.
Lowest costs, okay. Carl Loubser, you there? Hello, Carl Loubser? No. Olivia McCarthy? Oh, maybe some of you can't speak, or maybe you haven't got a microphone.
Yeah.
Natasha,
Yeah.
Natasha, what do you want from your bank?
That's Natasha Goliath. I want interest.
Okay, you want interest. Kathleen?
Yeah.
Kathleen, what do you want from your bank? Kathleen Hughes?
I was going to say in a savings account, I want a good interest rate.
Okay. Tell me, what's the most important thing that you want to know? What's the most important thing that you want to know? You want
Oh,
good
that my money is safe.
Funds are safe.
That my money is safe.
Yeah, your money is safe. And tell me, have any of you ever gone to the ATM and pressed the button and asked for a statement, and the amount that is in there is not what you thought should be in there? You've put certain money in there, you deposited some money, and it's not on your account. Or something's been taken out of your account which you don't know about.
Yeah.
Aha. Tell me, when that happened to you, how did you react?
You go crazy.
You contact your bank.
You went in common language.
You tell them you want your money.
You went crazy. Am I right?
Yeah.
Yeah. And you ran into the bank and said, what the hell is going on here? Who took this money off my account? What's going on here? Was that a fair reaction?
Yes.
It's a fair reaction, isn't it?
Yes.
Because you expect the bank to know exactly what's going on, and only things that you've authorized must be deducted off that account. 100%.
Yes.
Now tell me something. Is there any difference between what you want from your bank and what your clients want from you as regards their trust account?
There's no difference.
There's no difference. And yet many attorneys say, why the hell do I have to do bookkeeping? Would you go to a bank that has got a butcher as a chief financial officer? No, you wouldn't. Because you could say, hey, but these guys won't know, they don't know what the hell they're doing. You wouldn't go to them. You agree with me? Yeah. You want to become attorneys, handle trust monies, and you don't know what a debit or a credit is. Is it right of you then to take money from the public and hold it in trust if you don't know what the devil a debit or a credit is, or what a ledger is? It's wrong, isn't it? You have to, and you don't have to be a chartered accountant, but you must have sufficient knowledge to be able to run a trust account properly, because it is not your money. And you know, when a client gives you trust money, they lose all control over it. When I put my money in the bank, who's got control over it? I have got, because I've got a specific PIN number that I can withdraw, right? And access, I've got a specific PIN number. But once I've given money to an attorney, have I got any access to that money? Can I draw money out of his trust account? Not a chance. So in other words, that attorney has got even more control than what I've got when I put money into the bank. So therefore, I expect him to understand, him or her to understand even more about books than what the bank knows. So you can follow this. Trust money is extremely vital, such important stuff. Now, how do we know when a client gives you money that it is trust money? Because now when a client gives you money, it could be one of two things, isn't it? It could be business or it could be trust. Agreed? To determine if it's, if somebody owes you money, for example over here we had Sam, owes me 5,000, it's 500, he owes me 4,500. If he pays me 4,500, what's it got to do with trust? It's got nothing to do with trust. But if Sam, he said, look, I owe you 4,500, but it's another job I want you to do, so I'm going to give you another 5,000 Rand, I'm going to give you 9,500 Rand. Then 9,500 that he gives us, part of it is business and part of it is trust, so we would have to go into trust. So when you receive any payments, if you receive any payments from a client, and you've got to determine whether it's trust or business. You have got to go look in your business ledger, that's in your business ledger, and see, does that client owe me money? If he owes me money, he's only paying what he owes me, then it's business. It's got nothing to do with trust. But if he doesn't owe me anything in business and he pays me money, then I have to put it into trust. Does that make sense to everybody? Because
Yes.
now in the questions, you're going to be told,
Yes.
Mr. Jones gives you 1,000 rands. And now you've got to say, well, is this trust or is it business? That's why, let's just go back here. Flow chart. Is there a transaction? What is the next question? Is it trust or is it a business transaction? Because now you've got to decide, must I record it in trust or must I record it in business? Now in practice, it's much easier because you will know, Albert, I've never done any work for this guy. When he gives you the money, I've got to put it into trust. When you get it in the question here, what you have to look at is, does this client who's given me the money in the question just point out anywhere that he's already owes me money? Have I disbursed money on his behalf or have I charged him any fees? Okay, that is to determine over here whether it's trust or business. And that is for money coming in the bank account. Okay, as regards to payments, as to whether a payment from trust, or sorry, if a payment is trust or business, the only time that you can pay money out of trust is if the client has already got money in trust, he's given you money in trust. Because if I haven't got any money in trust and I pay a disbursement on the client's behalf out of trust, that would mean I'm using other people's money. Which obviously they didn't give me the mandate to give it. They don't give me the money to use it for my next door neighbor. It's only to be used for their purposes. Does that make sense?
Does.
You all with me? I know it's a hell of a lot to absorb all at one shot,
Yes.
but it makes a bit of sense, does it? We'll be going through it all. It's just that I want you to get a general understanding of it. Now, tell me, what were the 6 categories of accounts that we spoke about this morning, early this morning? What were the 6 categories of accounts that we needed to do to be able to prepare a set of financial statements? Can you recall it?
Income,
Expenses.
expense, assets, liabilities, drawings,
That's it.
and capital.
Excellent. Excellent. There we go. Income, expenses, assets, liabilities, capital, and drawings. This is what you would have in a set. That's the categories of accounts that you would have in a set of business books, correct? And under income, we would have fees, interest, rent, expenses, all of those things, assets, liabilities, capital. Now, tell me something. In trust, would you have capital? Would you have capital in trust?
No.
No, because I
No.
mean, why do we capital? Because we want to pay our first month's rent, etc., isn't it? So I don't need any capital in trust because I'm not going to pay any expenses or anything out of trust. So I wouldn't have any capital. Would we have any drawings of trust?
No.
No.
God forbid. Because that means you're taking clients' money for your own use. And that's highly irregular, isn't it?
Yes.
Because drawings is money that you use for your own purposes. A client gives you money in trust to be used for his purposes. So you can't take drawings. What about, is there income in trust? Godfrey?
Possibly your fees.
No, where do you put your fees through? So far today, where will we always put through fees?
Through
Always
the
in
business
business, isn't
account.
it? All of the invoices we always put through in business. Because is trust your money?
No.
No.
No, it's
No.
only it's money under your control or under your trusteeship, but it's not It's not your money. You can only use that money strictly in terms of the mandate given to you by the client. And fees is your money. So you can't put through fees in trust. So what about interest in trust?
No.
If there's money earned in trust, on trust money,
No, it goes to the client. It's their
It goes to
interest.
the Fidelity
that's
Fund.
it. It either
what you
goes
pay
to the
for.
client or it goes to the Fidelity Fund. But it doesn't come to you because it's not your money. So any interest on any trust funds, nothing comes to you because it's not your money. It either goes to the Fidelity Fund or it goes to the client. So would we have any income in trust? No, there's no income in trust. Are there expenses in trust? Do we have any expenses in trust?
Yes.
Yes, only
Yes,
our bank
Yeah.
charges.
disbursement.
Yes.
Okay, bank charges. Well, if we had bank charges in trust, those bank charges would be on behalf of the clients, isn't it? Now, how do we split that between the clients? How would I split the bank charges? I've got 100 clients and they're all giving me various sums of money. Now I get a bank charge. I've got to split this bank charge between the 100 clients. So that would not be a practical solution. So what is the arrangement that the Fidelity Fund board has made with legal practitioners? And what is the arrangement with the banks? They say that any trust bank charges must go off that legal practitioner's business account. It does not go off the trust account. Bank charges, there will be bank charges on the trust banking account, but they must be deducted off that legal practitioner's business account. But that legal practitioner will be able to claim those bank charges back from the Fidelity Fund because he has been investing those trust funds also for the benefit of the Fidelity Fund. What about in trust if we pay a sheriff? If we paid a sheriff or an advocate in trust,
I
would
would
that
say
be an
yes.
expense?
Or is it a disbursement?
Yes,
It's
that
yeah.
would be expense.
But if I paid if I paid an advocate in trust, why would I have gone to the advocate in the first place? Think of it practically. Why did I go to the advocate in the first place?
On behalf of the client.
On behalf of the clients. Thank you. On behalf of the client. So if it's on behalf of the client, if I pay that advocate, it must come out of the client's money, isn't it? Because the client is liable for the advocate, not me. I'm not using the advocate's not giving me advice. He's giving me advice for the benefit of my client. So the client must be responsible for that. So if I paid an advocate or a sheriff or anybody, a tracing agent, out of trust, it would go off against that client's, whatever that client has given me in trust. Now, if the client has not given me money in trust, could I pay it out of trust? No, because I would be paying it out of somebody else's trust money. It would then have to be paid out of business. But in other words, what we're saying is that in trust, we've got no capital, we've got no drawings, we've got no income, we've got no expenses. All we've got is assets and liabilities. What are the assets? Assets will only be the money that's in the bank. And if I invest any of that money for the benefit of the Fidelity Fund or for the client, that would be the asset. And I'd have a whole stack of liabilities because every client that has given me money in trust would be a liability, isn't it? Does that make sense? So my trust ledger would just have liabilities in it. That's all it will have, which is all the people that I owe money to, who have given to me to be used in the furtherance of the legal service that I'm rendering to them. Now, the books of the trust are exactly the same as the books of business. I'm going to have a trust cash book and I'm going to have a trust ledger. Let's have a look here. The flow chart. Is there a transaction? Question number 1, yes. Is it trust or business? And let us assume we say it is trust. Then I ask myself again the same question. Did money go through the trust bank account? Yes. Select the trust cash book. Did money go in or out of the bank account? If it went in, I debit the trust cash book and then I credit the client in the trust ledger. I would open an account for the client. If money went out of the bank account, I would credit the trust cash book and I debit the client. If no money went through the bank, the trust bank account, then I would select the trust journal, but I don't want you to worry about the trust journal now. We'll get to that a little bit later. So now when you go and do question A5 for me, you've got to read there and say to yourself, is this trust? Or firstly, is there a transaction? Now let's do, let me just go over here. I just want to clean this up here. I don't think I've done it yet. I just want to clean this up here. You also have to have a trial balance in trust. Let's just do, if you go to A5, have you got all your question papers there with you, A5? And if we take A5, the first, here we don't have dates here. You see, we just got numbers from number 1 to 14. We don't have dates, so your solution doesn't have to have dates. Now, number 1, you receive 1,000 rands from J. Jacobs for anticipated costs in a claim. Now, let's go back to our flow chart. You receive 1,000 rands from Jacobs for anticipated costs in the claim. Is there a transaction? Yes. Now, is it trust or business? Well, what does the word anticipated costs mean? It's costs that I'm anticipating to have, isn't it?
Have to be.
I haven't incurred them yet. So he doesn't owe me any money yet. So he's asking me to do a legal thing. And he says, listen, I want you to go sort out this claim for me. Okay, I'll sort it out for you, Mr. Jacobs. But I want you to give me 1,000 rands in advance, which I will put in trust. I will do the work. And when I'm finished doing the work, and I also need some of this money for disbursements that I'm going to incur on your behalf. So he says, okay, how much do you want? Well, you work it out and you say, I want 1,000. He gives you the 1,000. He doesn't, at that point, he doesn't owe you anything. So it cannot go into business. It can only go into business if he owes you. And if he owes you, it means he must have a debit ledger account. Jacobs must be a debtor. If he's not a debtor, it must go into trust. Now we say, did money go through the trust bank account? Yes, because when he gave it to you, and what did we read a few minutes ago there, section 86.2, every trust account practice must have a trust account with a bank and must deposit therein as soon as possible after receipt thereof money held by such practice on account on behalf of any person. So in other words, when you receive the money, you got to bank it immediately. You can't walk around with that money. Okay, so did money go through the trust bank when Jacobs gave us this 1,000? Yes. Select the trust cash book. Did money go in or out the bank? It went in. So if it's in, we debit because the cash book is receiving. So we debit the cash book. So over here, we would debit the cash book with 1,000. And can you see the trust cash book here? And then I would credit Jacobs. I open an account for Mr. Jacobs and I credit him. You can see over here in these books, the layout. Here's the business books, business cash book, business ledger, the business journal, but completely separate. Here are the trust books, the trust ledger, the trust cash book. You cannot put this, don't go mix this in over here. Remember, the examiner doesn't know if you know what is trust or what is business. You can't go and throw these. You can't just open an account, Jacob's over here somewhere, and it's in the middle of the business, and they expect the examiner to know that you know that it's trust. You've got to feed the examiner. So you need to be neat and clear and show these are my trust books. There's a distinct line between my trust and my business books. Okay. Are you good enough to go do question A5? Lara Ann?
Yes, sir.
You good? Victoria?
Yes.
Excellent. Okay. Will you go for it?
Yes.
Now 2:07, I'm going to give you probably about just short of a half an hour to do it. If you can give it a go.
So I have a question.
Yes.
So am I right in saying that there's no income in the trust account?
100% right.
But what about, because they say that if you receive money in the trust account, you have to place it in a interest bearing account at the, and then isn't that interest that you received, isn't that an income?
No, but who's it income for? Who's the beneficiary of that interest? It's either the client or the Fidelity Fund. You with me? So if put it this way, look on the screen there. Let's say Jake said to me, I must invest that 1,000 for him in trust.
Yes.
If I invested it, and let's say we earned 20 Rand interest for him. When I received the 20 Rand, I would put it into the trust cash book, correct? I'd put it into the trust cash book. And who would I owe that 20 Rand to? I would owe it to Jacobs because it's his money.
I see. Okay.
Does that make sense?
So it's more of a liability than it is an.
Absolutely. That interest is a liability because you owe it to the client or the Fidelity Fund. But it's not your money. So it's not income. What is income to you? Your salary is an income, isn't it?
Yes.
And who does it belong to? To you.
Yeah.
Okay, but this interest doesn't belong to you, so you can't have income in trust because it's not your money.
Okay.
It would therefore, any income that you earned in trust would belong to the client and would be credited to the client like Jacobs.
Okay.
You wouldn't have any income in trust. Does it make sense?
Yes. Thank
you. Wonderful. All right, any other questions? No other questions? Okay, will you go for it? Question A5, please. Can I stop the sharing of the screen, or do you need to see this on the screen here, the trust ledger?
I'm good. You can close it.
Okay. All right. If not, then just shout if you want me. Just give a shout and I'll be here. I'm here, but then I can just open it. I can share again. Okay, thanks. Go for it. It's now 2:10. I'll give you a shout as well. I'll give you a shout as we go along just to see in case you're getting stuck with something. I don't want you to be sitting stuck. Okay. Good luck. How are you all going? Hello? Anybody out there? Hello?
Almost done.
Hand in here.
Are you still going? Okay, a little bit more time.
Yes, please.
Okay, another few minutes.
Hi, Mr. De Kock.
Yes, sir.
So just a question regarding the exam. When we write the exam, do we have to draw all these tables ourselves, or do they give us like a...
No, you have to draw them all yourself. So
okay.
you need to get, they don't give you a drawn paper, you have to draw. So you need to take a ruler and just draw them, or your credit card or something, and use them to draw the lines.
I think a ruler would be much preferred. Thank you.
Okay, no problem. Okay, how are we going? Can we get going? Godfrey? Bianca?
Yes, we're going.
Can we get going? All right. Okay.
Proceed.
You all ready?
Yes.
Okay, fine. Number one, you receive 1,000 rands from J. Jacobs for anticipated costs in the claim. We've done that one already, but let's just run through it again. The flow chart. Is there a transaction? Yes. Is it trust or business? Because it says anticipated costs in the claim, and nowhere earlier in the question does it say that Jacobs owes us any money. It has to be trust. Okay. So now we go across to the trust. Go through the
Mr. De Clark, your screen's not showing, so we can't see what you're doing.
Thank you so much. Thank you so much. I didn't. Okay. There we go. Have you got it?
Yes, thank you.
Yes.
Okay. Thanks.
Yes, thank you.
I'll make this mistake again and again for the next 4 days. I always do it. So please just remind me each time. Okay. So it's trust. Did money go through the trust bank account? Yes. Select the trust cash book. Did money go in or out? It went in. So we debit the trust cash book. So we receive the money from Jacob. So we debited the trust cash book and we credited the account of Jacobs. Now you charge Adams a fee totaling 3,500. This is paid 2 weeks later. In other words, here we've got two transactions. We first charge him, then he pays us. Now, how did we charge Adams a fee? We made out an invoice to him. When we made out the invoice, did we have a transaction? Yes, we had a transaction. Is it trust or business? Well, if I make out an invoice, it constitutes income, and income can only be in business. So it's got to go to business. Money go through the business bank account, not when I made out the invoice. It only was paid 2 weeks later. But I had a transaction 2 weeks earlier when I made out that invoice. I had the right. If Adams had died or if I had died, I would have had a claim against him, even though he hadn't paid me. Legally, he owed me. So therefore, I've got to pass that entry. There's no money going through the bank. So the business journal. So the business journal, we are going to debit. We're going to debit Adams, credit fees, what fees is giving, and put through the narration. So let's open an account for Adams and we debit him with 3,500 from the journal. And we credit the fees with 3,500. 2 weeks later, he pays us. Now he owes us 3,500. If he pays us the 3,500, has it got anything to do with trust? No. He's purely paying me what he owes me, so it's purely business. So when I receive the money, where do I bank it into? I bank it in, there is a transaction. I bank it into business. It went through the business bank account. Did it go in or out? It went in. So we are going to debit the business cash book with 3,500, and we're going to credit Adams. We can see our wealth has grown by 3,500 as a result of what? The fee that we charged, because we've got 3,500 more in our bank account. You act on behalf of Brown in a divorce and charge him a fee of 2,000 rands and pay for minors disbursements on his behalf 100. Two transactions here. We first charge him the fee. Same as we did with Adams, we charged him a fee. We made out an invoice. Transaction, yes. Business, yes. Money through the bank, no. So it's got to go through the business journal. The 2,000 rands. I open an account for Mr. Brown in his divorce, and I debit him with the 2,000, and I credit the fees account. Posting from the journal over here. Now we pay minor disbursements on his behalf. Can I pay that? Can I pay the 100 out of trust? No, because the only money that's in trust is Jacobs. And Jacobs hasn't given me the 1,000 and empowered me to pay it on behalf of Brown. So if I've got no money in trust, For Mr. Brown, which I haven't, I have to pay it out of business. So when I pay it out of business, money went through the business bank account. So therefore I selected the business cash book. Did money go in or out? It went out. So I'm going to credit the business cash book with 100. And on whose behalf did I incur this disbursement? On behalf of Brown. So therefore, Brown, I paid this on your behalf. You owe me, so I'm going to put it against your account. So therefore, he now owes me 2,100 Rand. 1 week later, Brown settles his account. What does he owe me? He owes me 2,1. He pays me the 2,1. Has it got anything to do with trust? Nothing. So therefore, it's got to be banked into business. So I receive the money, I bank it into business, meaning I've got a business transaction, money through the business bank, in or out, in. So I debit the business cash book, and I credit Brown in the divorce, and his account now squares off. He doesn't owe me anything, and I don't owe him anything. A stop order for the lease of a firm vehicle goes through your bank account for 2,500 Rand. What is a stop order? It's the same as a debit order, excepting that the amount is fixed every month. But it is money that is deducted. You've authorized the bank to pay on a monthly basis to pay the money for the lease of the vehicle. So every month on a fixed date, 2,500 comes off your bank account and goes to the provider of the vehicle. So there is a transaction. It is business because we can't be leasing a vehicle through trust because it's not our money in trust. Is money going through the bank account? Yes. So we select the cash book. Is it going in or out? It's going out. So we're going to credit. And what account do we open here? We open an account called the lease of the vehicle because this is a monthly thing, the same as a rent. It's not an asset. And we're going to debit the 2,500 Rand there. You receive interest on your bank account for 100 Rand. How do you receive interest on the bank account? The bank purely shows it on your bank statement, isn't it? When the bank shows this interest on the bank statement, is there a transaction? Of course. Yes, there's a transaction. Is it trust or business? It says your bank account. So I'm assuming it is the business. So therefore, money went through on the bank account. So is there a transaction? Going back to the is there a transaction? Yeah. Trust or business? Business. Did money go through the business bank account? Yes. I select the business cash book. Did money go in or out the bank? It went in. I debit the business cash book. So I debit the business cash book here with the interest of 100. And I open up an account called interest received. And I credit the 100 there. I'm not going too quickly, am I?
No, you're so fine.
Is everybody staying up? Because I don't want you giving up and saying, listen, I can't stay ahead. And just please slow me down if I go too quickly. Is everybody okay?
Yes.
Okay. Okay, good.
Yeah.
If it is too quick, please just stop me. Salaries are paid 6,000 Rand. Salaries are paid 6,000 Rand. Again, we go back to flow chart. Transaction, yes. Trust or business, salaries can only be paid. We can't have expenses in trust, so it must go through business. How do I pay it? It's got to go through the bank account. So I select the business cash book. Money went out. So I'm going to credit the business cash book with the salaries of 6,000. And I open an account for the salaries and I debit that with the 6,000. Okay. Now you pay advocates' costs for Jacobs totaling 600 Rand. Now, I pay, so I know I have definitely got a transaction. Yes. Is it trust or business? Well, now I have a look. Have I got money in trust for this client? Because why would I pay it out of business if I've got money for the client? When he's given me the mandate that I'm giving you this money that you can use for disbursements on my behalf. Yes, I go look in my ledger. And Jacobs has got money in trust. In fact, and he's got more money than what I'm paying out. So I can pay this out of trust. So if I can pay it out of trust, going back to my flow chart, it is trust. Did money go through the trust bank account? Yes, select the cash book. Out, credit the cash book and debit the relevant account. So I'm now going to credit the cash book with the 600 and I'm going to debit Jacobs because now the 1,000 that he gave me, I've spent 600 on his behalf. Now I'm only holding 400 for him. The following amounts are paid: petty cash, rent and electricity. Those are all clearly business expenses, and it's all paid. So those monies must go through my business bank account, in or out. They've all gone out. So I credit the business cash book with all three of those: petty cash, rent and electricity. Then I open an account for the petty cash, and I debit the 400 Rand there. I open an account for the rent, and I debit the 1,500 there. And I open an account for, where's the other one here? I open an account for the electricity, and I debit the electricity, also the 300 there. You get a loan from RAT, 7,500 rands. Again, the same as Investec in the previous example. How did I get a loan? He gave me the money, not so? And when he gives me the 7.5, what do I do with it? I put it into my bank account. Have I got a transaction? Yes. Is it just or business? It's business. Did money go through the business bank account? Yes. Business cash book, money go in or out? It went in. So debit the business cash book. So now I debit the business cash book with the 7,500 that I received from RAT, and then I open an account for RAT. Whatever near rent, that will be there. I open an account for RAT, and I credit his account. So what am I book showing now that I owe RAT 7.5? Sometime later, these are only numbers, because it looks really funny when you look at 10 and 11, you think it's the same day. Why am I paying him back on the same day he gives me the money? But there could have been a period of time between receiving this loan. These are just numbers. So I'll pay him the first installment of 500 Rand. Transaction, business, money through the bank account, yes, yes, and yes. So I credit the business bank account with 500, and I debit the loan of RAT with 500. Now again, what is the balance on RAT's account? Well, 7,500 less 500, that gives me 7,000. Now to check my arithmetic, I put that 7,000 as the balance on this side. I add the 5 and the 7, and I get 7,500. And I add 7,500 on the side, and it's also 7,500. So I know that in the balancing of my account, it is correct. You charge further fees to CCAT, 10,000. Again, I make up an invoice to CCAT, send it to him. When I send it to him, have I got a transaction? Yes. Just or business? It must be business. Did money go through the bank account? No. So I select the business journal, debit and credit the relevant ledger accounts, which is the debit CCAT and credit fees with 10. Let's post that. Debit CCAT with the 10, and then I'm going to go to the fees account, and I'm going to credit the fees account with the 10,000 for CCAT. You draw a salary of 5,000 Rand. You draw a salary. Is there a transaction? Yes. Trust or business? Must be business. I can't be drawing salaries out of trust. Money go through the business bank account? Yes. Select the business cash book. Did money go in or out? It went out. So I'm going to credit the business cash book over here with the salary for myself, which is 5,000. Now, a number of you, I'm sure, have taken it to salaries. Is that correct? You've taken it to salaries. Am I right?
Yes.
No,
Right.
I've opened a separate account for drawings.
Look at the partner salaries. I'm going to take it to a thing called partner salary. Why am I doing this again? Because when I look at my financial statements, I actually want to see how much have I taken as a salary for myself. Because when I started this practice, I was already earning a salary at the place that I was working. What did I say to myself? I said, listen, when I start this practice, it must at least give me a salary equal to what I'm earning now, and it must still run at a profit. Otherwise, why am I going in for this? But this salary, my salary, I might change it during the course of the year. I might, 1 month, maybe things are not going so well, so I don't draw a salary for myself. But at the end of the year, I want to see what is the total salary that I took. So I now wanted to be included with these salaries here. Otherwise, I would have to do an analysis of this account to see what the salaries I paid my employees and what I paid myself. So I decide I'm going to open up a separate account, which I did here, and I put it to salaries. Now, I heard you said that you put it to drawings, but I want to put it as a salary here, because if I take a fixed amount, firstly, the receiver wants me to pay as you earn on it, because I'm drawing a salary for myself. So I don't think it should go to drawings. It should go to either the salaries or to the partner salaries. And now I pay the personal tax of 3,000. Again, it's a transaction. It is business, and money has gone through the business bank account. So I'm going to credit the business bank account. And now I've opened an account for drawings. Why did I not open an account for tax? Because tax is paid on the income that you make out of the business. It's paid on the salary. Plus, if it's a sole proprietor, the sole proprietor is going to pay tax on this 5,000 plus any profit that he makes in here. But the tax that he pays here, he might have other income. He might have income from rents that he receives or interest that he receives. Okay, so these 3,000, this was a separate legal entity, say it was a company or something, then I would open a tax account. Because it is a sole proprietor and he's taking out money for his personal use, and tax is a personal use, I therefore take it to drawings. Okay, that's my explanations for it. Now let's go to our trial balance. Let's have a look. What is the first account that we got in the business? We've got the fees. And what are the fees? It's the total of these over here. It's 15.5. So the fees, we got 15.5 credit. Then we got interest received and the lease of the vehicle. We record the interest fees and the lease of the vehicle, the credit and the debit. Then we've got salaries and petty cash. Salaries and petty cash. I'm extracting them, the salaries and petty cash. Hey, what happened there? Salaries and petty cash. Now I've got rent and the loan of our RAT and electricity. Which one have I got here now? CCAT also owes me. And the loan of our RAT. This is slightly out of order here, I see. The partner's salary, but it doesn't matter if it's out of order as long as it balances. And then, of course, the bank account. Again, here we work out the bank account. What have we got on this side? We've got a total of 13.2, but on this side, we've got a total of 19.3. So 19,300 has gone out of the bank, but 13.2 went into the bank, meaning that we obviously owe the bank still a sum of 6,100. 19.3 is the sum of those, which you can see at the bottom of the screen is 13.2. 13.2 divided by 93 is 6.1. I'll slot that in here. Why? Because the credits are bigger than the debits. And now to check my arithmetic, I put that 6.1 in over here as a debit. And then I add that column. And what do I get? 19.3, and I can see 6.1. So I've got a bank overdraft. So I slot in the bank overdraft here of 6.1. Sorry, the drawings first, and then the bank overdraft of 6.1. And now I go and add these. I add the slot up, and I get 28.7. I add that lot up, 28.7. Now, do I need to do a trial balance for the trust? Of course, very much so, even more than my own business, because this is not my money. This is client's money. So therefore, the balance that I've got here is 400. And who does it belong to? It belongs all to Jacob. So I slot that in on the trial balance, and that also balances. Is that okay? How did you all go? Ashley, you go all right?
Yes, yes, I did. Thank you.
Okay, Victoria?
Yes, I did well. Thank you.
Good stuff. Well done. Now, we're going to move on to something a little bit more. We've done now the business, we've done trust, look, there's a lot of things that we still got to learn about it, but at least we've got a basic understanding of how it works. Now, what I'm going to just look up here quickly. I just want to see here. I just want to open this one here. Okay. All right, let's just work through here. Trust money. We've got some of it. Who may receive and handle trust money? There's only 3 people: legal practitioners, yourself, estate agents, and sheriffs. Are the only people who are legally entitled to receive and handle trust money. That is why your books as an attorney are quite unique, because no other business apart from those 3 have got this trust and this business. All other businesses have only got a business account, finished, got no trust money. Now, what is trust money? It's money received by a legal practitioner from or on behalf of a client, and can only be used in accordance with the specific instructions of that client. These monies do not belong to the practitioner and accordingly must be kept in a separate banking account. The practitioner who has complete control of these monies has been entrusted by the client and must act according to the client's instructions. Does this trust money form part of the assets of the legal practitioner? No. It is a client's asset under the total control of the practitioner, and as such, it must be kept in a separate bank account, clearly identified as a trust bank account. Now, I know a number of people, they often think that we open a bank account for each client that we receive trust from. No, we've got one trust bank account, but all the clients who give us money in trust, it all goes into that one bank account, and then we have a ledger for each client, a separate ledger for each client. Say, for example, all of you banked with Nedbank. As stupid as it sounds, Nedbank has got a bank account. Now, when you deposit your salary at Nedbank, Nedbank has got a Nedbank bank account. All of your money goes into the Nedbank bank account. Now, when they write up their books, they ask themselves, have we got a transaction when this client puts his money into our bank account? Yes, we have got a transaction. They can't ask if it's trust or business because it's a bank and they're not allowed to have trust money. So they say, did money go through our bank account? Yes. So they select their business cash book. Then they ask themselves, did money go in or out? Well, it went in, so they're going to debit the business cash book, and then they open a ledger account for you. And that is credited to your ledger account. Now, the bank statement that you get, right, that you get, or the statement that you get when you go press the button at the ATM, what is that? That is your ledger account in the books of the bank. You follow? And that is why if you put money in the bank, you'll always have a credit balance there on your statement. Why have you got a credit balance? Because you are a creditor of the bank and you are looking at the bank's books when you're looking at your statement. It's your account in the books of the bank. You are a creditor, so you will have a credit balance. If you are overdrawn, you'd have a debit balance because you'd be their debtor. Now that is exactly the same as your trust. Now, these monies that you received from the client in trust, which is completely under, when we received it, like we saw with Jacobs there, it was debit the trust cash book and credit Jacobs. Now, when may a practitioner take some of the trust monies for his own use? When can you take, because why, let's just think about it. Why did you ask the client to give you the money in trust? Because you want to ensure that you're going to get paid for your fees, number one, isn't it? You don't want to do work for somebody and then you say, okay, pay me, and then they don't pay you. Now you've got to run around forever to try and get your money, and then you eventually got to sue him or her, whatever it is. So before you even start to, because in many cases you don't really know this person. They could come off the street and come and say, listen, I want you to do my divorce. You don't know them from a bar or soap, and now you go do work for them. So instead of having to do all kinds of credit checks, etc., you tell them, well, listen, I'll do the work for you, but you need to give me a deposit. That money you put into trust. Why did he give you a deposit? To cover any charges that you're going to charge or costs you're going to incur for that client. Where would you charge the client, though? You charge him in business. If you didn't have money in trust and you had disbursements, you'd also pay them out of business. Of course, if you've got money in trust and you pay the disbursements, you'll pay it out of trust. But now, that money that is lying in trust, when may you, as the practitioner, use some of it? Once a client has been charged a fee for work done, then you are entitled to take an amount equal to what he owes you out of trust and put it into your business bank account. And then you can use it for whatever purposes you want to. Now, so when may a practitioner take some of the trust money for own use? Once the client has been charged a fee for work done. B, or a disbursement has been made by the practitioner on behalf of the client from the business account. Okay? In other words, if I incurred a disbursement on behalf of him, I paid out, for example, I pay the advocate for a client, but I don't have any money in trust. So I pay it out of business. Now, when I pay that advocate out of business, I debit it to the client because the client owes me. So now he owes me. If he owes me and I then have other monies and he puts money into trust, then I can take some of that trust monies to settle what he owes me in business. Also, the fee and the disbursement has been done per the agreed instructions of the client and in a specific matter. What do those words mean? A specific matter. If I've got a client who comes to me for his divorce and for a collection matter, if he gives me money in the divorce and I've got money in and now there's a shortfall on the trust, on the collection matter, can I use the divorce money for the trust? No, only if he has given me instructions that you can use the money on the divorce for your collection matter if you're short in the collection matter. I can't just willy-nilly go and take, he's got 3 different matters. I can't just go willy-nilly take out of the one and the other. I have to have agreed instructions in writing from him. So that when we transfer the client, if I've charged for a fee or if I had a disbursement and it's fully agreed and the client now owes the practitioner, then the practitioner may take an amount equal to that owed to him by the client from the trust of that account of that client to settle the amount owed by the client in business. Now, so what we have established so far is that you are entitled to use monies in trust. When are you entitled to use it? Only after this has happened here. Okay. Now the question is, how do you take the money? How does a practitioner take trust monies to settle amounts owed to him? He makes use of a book which is unique to those entities empowered to hold trust funds, and it's called the Transfer Journal. The Transfer Journal is used to record the transfer of funds from the trust ledger account of a client in a specific matter to the business ledger account of the same client in the same matter. It's quite a mouthful. The Transfer Journal is used to record the transfer funds. Now, what does it say here? From the trust ledger account of a client in a specific to the business ledger account. So this journal has got nothing to do with the cash books. It's got nothing to do with the banks yet. It's purely recording the transfer of value from the trust ledger account to the business ledger account. Now let's have a look at this. Here's an example. A practitioner receives 6,000 in trust from Joe. to handle a legal matter. Upon completion of the legal matter, a fee of 4,600 is charged. Let's record this. Practitioner receives 6,000 in trust from Joe. So therefore, when he receives the 6,000, is there a transaction? Yep. Trust or business? Trust. Does money go through the trust banking account? Yes. So we're going to debit the trust cash book and we're going to credit Joe. Everybody got it? Natasha, you happy? Natasha,
Yes, I am. Yes.
Good, you happy? Great stuff.
Yes.
Okay, you happy with that 6,000 that we got from Joe? In trust? You happy with it?
Yes.
Yes. Natasha's still there?
Yes, I'm here.
Okay. But are you happy with the 6,000 that we got from Joe? We need to trust and we
Yes.
get it Joe's account. You got it on the screen?
Yes.
Okay.
Yep.
Now,
Yes.
completion of the legal matter, we charge 4,600. We charge Joe 4,600. So we debit Joe with 4,600. But we also received 10,000 in trust from Zaka. When I received the 10,000 from Zaka, I put it into trust and I credit the account for Zaka in the trust ledger. Okay. Upon completion, we charge a fee of 8,000 Zaka. So when we charge Joe and we charge Zaka, did we have a transaction? Yeah. When we charge fees, is it trust or business? It's business. Have these monies gone through the bank account? No. So therefore, it's got to go through the business journal. So we're going to debit Joe as the debtor, debit Zaka as the debtor, and credit fees. And now it's in the journal. I posted debit Joe, debit Zaka, credit fees. Now, what have I got? If I have a look here Joe owes me 4,600 Rand, but I've got 6,000 of his money in trust. Okay? Zaka owes me 8,000, but I've got 10,000 of his money in trust. Now, what did this just say over here? When may a practitioner take some of the trust monies for own use? When the client, after all of this, he has been charged for a fee, he owes the practitioner, then the practitioner may take an amount equal to that owed him from the trust account to settle the amount owed by the client. So here we've got the perfect example. He owes me 4,600, I've got 6,000 in trust. He owes me 8, I've got 10 in trust. Can I do a transfer? Yes, I can do a transfer. Okay, I can do a transfer. How do I do a transfer? What did we say up above here? We use the transfer journal. What does the transfer journal do? It takes the money that Joe owes us out of trust, okay, out of trust over here to settle the business. So what do? We debit Joe in trust with 4,600. We credit Joe in business with 4,600. We posted that 4,600 is debited to the trust account, and this 4,600 is credited to the business account. Zaka owes 8, and I've got 10 in trust. Again, I can take 8 out, the lesser of the two figures of the balances. So I'm going to debit Zaka in trust with 8 and credit Zaka in business with 8. Can you see that we have now sorted out the ledger accounts? But have we got the physical money yet? Have I been paid the 12,600? The second leg of the transfer. You don't know. Sorry, all of you don't have this. You don't have this document yet. You don't have this document. There's one or two. There's this and that I will send to Prudence. I want you just to concentrate over here now. Okay, I'll send it through to her. I just want you to get understanding of it. I see the questions here that you're also asking Prudence. Okay, so here now, I've got 12,600. What do I now do is I make a payment. I do an EFT from trust 12,600 to my business. What I can see now, this credit of 12,600 is effectively represented by that 4,6 debit and that 8,000 debit in trust. There's the two debits and there's the credit. Here in business, there's the debit and there's the two credits. So this is unique, this transfer journal. You're going to struggle with it, but you're going to be doing it ad nauseum. And then you will get onto it. You will understand it slowly. And I don't expect you to understand it straight away now, but it's unique. Let's have a bird's eye view of these set of books here. Here's the business. We've got the business cash book, the business journal, which are books of prime entry. Recorded in the books of prime entry, posted to the ledger. Trust, prime entry, cash book, and journal, posted to the ledger. And we can see this posts there, this posts there, this posts there, this posts there. Here's the transfer journal in the middle of these two sets. It's got one leg in the trust ledger and the other leg in the business ledger. There it's got one leg in the trust ledger, the other in the business ledger. So now you can see, hey, wait a minute. This is unique because it's got, but where is the balancing figure? The balancing figure of all of these entries in the trust is this money that we then take from the trust and we bank into business. So that 4,6 and that 8 is up to 12,6. Two debits represented by that credit, and that 12,6 debit represented by these two credits. Why do we do it like this? Why do we do it like this? The reason we do it like this is because we don't have one client. I've got 100 clients. So when I do a transfer, I'll be doing transfers for say 30 or 40 clients. Say I did all my transfers once a week. I would be doing 30 or 40 transfers, different clients. That would mean if I did them individually, I'd have to do 30 or 40 EFTs from the trust cash book into the business cash book. I would to make, can you imagine what the bank charges would be? Because for each EFT, they're going to charge me. I'm going to be sitting, and I, as a practitioner, I would have to sit there and put my PIN number for each and every one of these. And what is it that I'm selling as a legal practitioner? I'm selling hours. I'm selling time. I have a charge out date and I charge out the time. Now, if I'm spending my time doing EFTs, can I charge anybody for it? No, I can't. So therefore, we use this transfer journal, and then the legal practitioner only has to do one EFT and only has to number in once. It takes 3 minutes to do it, as opposed to spending 2 hours, and 2 hours that he could have been charging clients and making money and getting ahead with his work. So this is what the transfer journal is about. I'm not going to go through it again right now because we're going to do it. What I will do is I will send this on to Prudence to send it through. I only gave you 4 pieces, okay? I only gave you 4 pieces. So I'll send this on to Prudence now and ask her to send it to you together with the solutions. I'll also ask her to send, there's another one or two, I'll also send it through to her. Okay. What I'd like you to do now is to get going on question A6. Now you'll see in A6 that you have got money in trust from a client called Bill, and you have charged Bill, and when you get to the end of the question, you must do the transfer. Okay? You have to try and do the transfer. Go for it. I'm going to send you this in the meanwhile, but we will work through it. Don't panic now. Just take your time and think. Try to understand what you think you're doing, what the transfer is all about. It is a bit befuddling, but you'll get it right. Any questions? Hello? Anybody there? Liam?
No questions. No questions. Thank you.
All right.
No questions. So can you just repeat that? We must do A6.
A6, please, if you'll do A6.
Thank you.
Okay, then I'm going to send this off to Prudence. Okay, thank you. You go ahead, and so I'm going to stop sharing, otherwise it goes all over the show. Thank you. course, sorry boy. Just a moment. Here we go. I'll be able to hear everything that they say. All right. Could we maybe do this so that we can get it done by 4 o'clock?
Yes, please, sir.
Okay. All right.
Yes.
Ooh, goodness gracious me. Sure. 1 second, please. I just put on headphones and all of a sudden the volume is so much louder. Okay, so can somebody just speak to me that I can just hear you? Anybody?
Ready to go?
Okay, great, thank you. Because I couldn't hear so well earlier on, so I've just put in these earphones. And
Hello.
Hello, now the volume is so much louder. You all sound so much sweeter. Thank you. Okay, you have recently started to practice and conclude the following transactions. What do we have to do? Record the above transactions in their business and trust accounting records, clearly identifying the records. This is very vital. As I said to you earlier this morning, you must clearly identify what the records are because the examiner doesn't know if this is trust or business. And if you don't identify it, cannot give you the marks because he doesn't know if you know whether it's business or trust. So you must be very clear in your books, a clear distinction between trust and business. Then we must transfer whatever we're entitled to and extract a trial balance. No provision is required for value-added tax. Again, no dates here, just from number 1 to 11. You deposit 10,000 into your business bank account as capital. Again, going back to the old flow chart. Transaction, yes. Business, money through the bank, yes. So we select the business cash book. And money went in, so we're going to debit the business cash book with the 10,000, and we open an account for capital, and we credit the capital with 10,000. You obtain a loan from Credit CC totaling 5,000 to be used as additional working capital and deposit this in your business banking account. So they tell you, you deposit it into your business banking account, meaning your business cash book has received. So we're going to debit the business cash book with 5, and we open an account for the loan of Credit CC, and we credit the 5,000 there. You draw the following amounts by card: petty cash and the cashier's float. Transactions, going back to the flow chart, transactions, yes. Trust or business, business. Money through the business bank account, yes. Cash book, money going out. So again, we credit the business cash book with the 250 and 100. We explained earlier this morning what petty cash is. What is the cashier's float? The cashier's float, what is it? If you are the first person that walks into Pick and Pay and you want to go buy a packet of cigarettes first thing in the morning, and you're their first customer, and you've only got a 200 Rand note, and the cigarettes cost you 80 Rand, they got to have change to give you, correct? So that is what we call the float. Monies are drawn, and they are given to the person who's the receiver of money, so that they have got change. At the end of the day, this 100 Rand float that you give the cashier, he must be able to give it to you back at the end of the day. So this is an asset, and it must be reflected separately in the ledger in a separate account. So we can open an account for petty cash, put that with the 250, and the cashier's float 100, and both of these are assets which will form part of your net worth in the balance sheet. You pay for fuel at the garage, 120, same thing. Business, money through the bank account, yes. So we credit the business cash book and we open up an account for fuel, or you might have called it motor expenses. That's fine as well. And we debit the 120 there. You pay salaries of 3,000 in business, money out the bank account, yes. And we open an account for salaries and we debit the 3,000 Rand there. You pay yourself a salary of 4 and draw a further 1,000 again for the same reasons I gave you earlier on today. It's again business, and it's both of them. It's money going out the business bank account. But the partner salary, I'm opening a separate account. Some of you might have put it to salaries. I'm opening a separate account of partner salary. Both of them are correct. And then I open an account for drawings, and I debit the drawings with 1,000, and that's also correct. You pay the first installment on the loan from Credit CC in the amount of 400. We now pay Credit CC, who gave us the loan, and the first installment is 400. We pay them. Do we have a transaction? Yeah. Is it trust or business? Is business money through the bank account? Yes. So we credit here the 400, and we're going to debit the 400 here. Now, working out the balance here, 5 less the 4, the balance is 4,600. I slot that in down here, and then I put it on the debit side because it's a credit balance here, and I'm checking my arithmetic. That adds up to 5, and that adds up to 5, so it is correct. Now, client bill consults you on a third-party claim and pays you a deposit of 3,000 to meet anticipated costs. Let's go back to our flow chart. Is there a transaction? Certainly there is. Is it trust or business? Well, at this point in time, does client Bill owe us any money in business? No, he doesn't owe me anything in business. And it also says here to meet anticipated costs. So it must be trust. So it is a trust transaction. Did money go through the trust bank account? When it gives you the money, you have to deposit it, as we saw there earlier in section 86, that you must deposit it on the date that you receive it. So does money go through the bank account? Yes. So therefore, we are going to debit the trust cash book. We debit the trust cash book with the 3,000 received from Bill, and we open an account for Bill in the third-party claim, and we credit his account with 3,000. Now, this is a bit strange, and some of you might have found it a bit strange. You obtain counsel's account in Bill's claim, which you pay immediately, 700 Rand out of your business account. Now, you might say, but listen, we've got the 3,000 in trust. Why did you pay it out of business? Well, we don't really know why. It could be that it all happened on the same day. You didn't realize when you paid counsel account that the money had come in from Bill, so you paid it out of business. But if the question says you paid it out of business, they are testing you to see if you know how to treat it in business. So if we paid it out of business, we go through the flow chart. Yes, we've got a transaction. Yes, it's business. Did money go through the business bank account? Yes, so we select the business cash book. Did it go in or out? It went out. So I'm going to go to the business cash book, and it goes out. And I pay an advocate bill 700 now. What account do I post that to? I don't open an account for advocate bill, because if I open an account for advocate bill, it would look as if advocate for Bill, as if the advocate owes me money. I open an account for Bill in the third-party claim, and I debit him with the advocate that I paid on his behalf, 700. I don't open an account for the advocate. Otherwise, it's going to look as if the advocate owes me 700 Rand, and it's not. It is Bill that owes me the 700. We now charge Bill an interim fee of 1,000 Rand. How do I do that? I make out an invoice to Bill, and I call it an interim fee. What is an interim fee? This third-party claim is probably going to last a couple of months. So because it's going to last a couple of months, I arrange with Bill, as we go along, I'm going to charge you every month because I need the cash flow to be able to pay for my salaries and wages and rent, etc. Are you happy with that? And he says, yes, certainly I'm happy with that. So I charge him an interim fee. I make out an invoice. When I made out the invoice, have I got a transaction? Yeah. Trust or business? Business. Has 1,000 rands gone through the bank account? No. So therefore, it's got to go into the business journal. And in the business journal, what do I debit and what do I credit? Well, bill is my debtor. I always debit the debtor and I credit fees, which is me giving of my legal skill. I've already got an account for Bill, so I'm now going to debit him with a fee of 1,000, and I open up a fees account, and I credit the fees with 1,000 posting from the journal over here. Okay. The bank levies charges totaling 100 rand. Do trust bank charges go through the trust bank account? No, as I explained to you earlier today. Trust bank charges all go through the business, but they can be recovered from the Fidelity Fund. So these bank charges, I don't know if they trust or business, but they certainly go through the business. Is it money going in or out the bank account? It's going out the bank account. So we credit the 100 and we open an account for bank charges and we debit the 100 here. All the transactions have been done. Now we must transfer whatever we are entitled to transfer. Now, to be able to transfer, what do we need? We need a client owing us money in business, and we need money in trust for the same client in the same matter. Have we got those two things? Yes. Bill owes us 1,700 rand in business in the third-party claim, and I have got 3,000 rands in trust for Bill. So can I do a transfer? Yes. He owes me money in business and I've got money in trust. How do I do a transfer? What book do I use to do the transfer? I use the transfer journal. What is the amount that I'm entitled to transfer? Well, he owes me 1,700 and I've got 3,000. I can't transfer more. It's always the lesser of these two figures. If I only had 1,000 in trust and he owed me 1,700, I could only transfer 1,000. But he owes me 1,700, I got 3,000 in trust, I can therefore transfer the full 1,700. How do I do that? I use the transfer journal to record the transfer of value from the trust ledger account to the business ledger account. So I need to debit the trust ledger account of Bill and credit the business ledger account. And I do that in this transfer journal. I debit the trust ledger account Bill, and I see here put in brackets T for trust, and I debit 1,700, and Bill B for business, I credit. Now I post that Bill trust debit. I go to the Bill in the trust ledger account, Bill in the trust ledger account, I debit him with the 1,700, and then I go to Bill in the business, Bill in business 1,700 rand credit, and I credit him with the 1,700 rand, and his account is squared off. Can I do any other transfers? No, because there's nobody else who owes me money and I don't have any other money in trust. So therefore, the second leg of the transfer now, I've sorted out the ledger accounts. I still need to get the physical money out of this 3,000, which is lying in the trust banking account. So I do an EFT from the trust bank account for 1,700 rand, and I EFT it into the business bank account at 1,700 rand. So my transfer is now complete. Now I must extract the trial balance. Well, let's run through the trial balance. If we go through, in business, the capital was 10,000, credit CC 46, 250 for petty cash, and 150 for the cashier's float, fuel 120, salaries 3,000, partner salary 4, drawings 1, fees 1, bank charges 100. And now if I work out the balance here, this adds up to 16,700, and those credits all add up to 9,670. So that gives me a balance in the bank account of 7,030. To test my accuracy of arithmetic accuracy, I slot in the 7,030 there. or here. And then I add this lot up, and I also get to 16,700, and I know it's correct. So I can put in the 7,030 here, and then we can see it balances. In the trust, normally, if I was finished with Bill's work, I would pay him back. But here we said it was an interim fee. In other words, it wasn't, we haven't finished the work. Interim means we're still ongoing. So therefore, I'm just going to continue to hold the money. So how much money have I got in trust? For Bill, I've got 1,300, and who does that money all belong to? It belongs to Bill. So when I do my trust trial balance, is the bank account has got 1,300. Who does all of that money belong to? To Bill. And there it also balances. Any questions? Are you still there? Hello?
No questions from my side?
Anybody else?
No questions here. No questions.
No questions. It's exactly 4 o'clock on the dot. Shall we all go home and I'll see you at 8:30 tomorrow morning?
Sounds great. Thank you so much.
Okay.
Thank you.
Perfect.
Bye-bye.
Thank you.
Thank you.
Okay.
Thank you.
Bye.
Thank you.
Bye.
Bye.
Bye. Bye. Have a lovely evening.